If you want to make huge profits from trading crypto, stocks, or forex, you definitely need to learn the scalping strategy I'm about to show you in this video. It doesn't really matter if you're a beginner or a professional trader, this strategy will work for absolutely anyone who has a basic knowledge in trading. You can apply this for trading on any market with a high level of daily volume, such as crypto, stocks, or commodities. I will also backtest this strategy 100 times to prove how profitable it really is. But before I show you, don't forget to smash that like button, subscribe, and turn on those notifications, as it really helps me stay motivated bringing you all these strategies. Now, without further ado, let's get into it. Okay, so for this strategy, we're currently looking at Bitcoin versus the US dollar on the 5-minute time frame. And for this strategy, we're going to be using two free Tradingview indicators. The first indicator we'll be using is called Relative Bandwidth Filter, which is this one here. Then the last indicator we're going to be searching for will be called WT_LB, which is our wave trend oscillator by Lazy Bear. Before we continue, let's go over how we use these indicators. For the first indicator, this is a volatility indicator, as it tries to identify the area of low and high volatility based on comparison between bandwidth of higher length and ATR of lower length. This is used to filter out non-trading zones based in volatility, as this purple moving average is the volatility check line, while these three band lines are the highs and lows of the market's volume. And for our second indicator, we're using the wave trend oscillator. It works just like the relative strength index, only that these give more accurate readings, as it's better than the regular RSI in terms of identifying overbought and oversold zones in the market. We're going to make a few changes to the style of this indicator to make it a little more visible, and for this we're just going to untick a few options. We're then going to come across to this indicator and change the color of our line. Now the strategy is ready, let's get into our trading rules. Now, for a long condition to be valid, we first need to see if our wave trends line cross into our oversold zone, as this signals potential bearish reversal is about to take place. We're then waiting to see if our green moving average crosses above our red moving average. We're only going to be placing a buy order once we see the white volume line moving above our blue line, as this shows that we have enough bullish volume to ride a bullish trade. Also note that if the white moving average is not yet above our blue band line, we would have to wait for this indicator to catch up for the condition to be met. This will eventually become invalid if we see the wave trend moving average cross above our middle level. Then our trade would be invalidated and we would move on to the next. So we see that we have all of our conditions met, so we can safely enter a long trade on the close of our trigger candlestick. We'll then be bringing our stop loss down towards our most recent swing low, and then we are going to be targeting 1.5 times the risk. And we see we had our first successful trade. Here is another example of a long trade. So we see we had our wave trend close below our lower level, meaning that we are currently oversold. We then got our bullish cross where our green moving average moved above our red. We're then looking up towards our volatility indicator, but we are yet to see our white line cross above our blue line. So we're going to be waiting for this indicator to catch up, and if by the time it does we are still positioned below our 50 level, all of our conditions are met to enter our long trade. So we see that our white line broke above our blue moving average there, and looking down towards our wave trend, we are still positioned below our 50 level. So we can safely enter a long position on the close of our trigger candlestick, bring our stop loss down towards our most recent swing low, and once again targeting 1.5 times the risk. Another successful trade. Notice how our wave trend is doing a good job at eliminating false signals, and combining both of these indicators is what you actually need to turn this into a profitable strategy. So please stick to the conditions as stated if you truly want to be a profitable trader. The exact opposite rules apply for short trades. We first need to see if our wave trend crosses above our upper line, meaning we're in our overbought area. This will signal potential bullish reversal is about to take place. We're then looking for a bearish cross on this indicator where our green line crosses below our red line. We're only going to be placing a sell order when we see our white volume moving average positioned above our blue band. This shows us that we have enough volume to ride our bearish trade. Please note, if the white moving average is not yet above our blue line, we will have to wait for this indicator to catch up for all of our conditions to be met. This will be invalidated if we have our wave trend moving average cross below our middle zone. Then our trade would be invalid and we'll simply move on to the next one. So we see that we have all of our conditions met, so we would be placing a sell order on the close of our trigger candlestick, which is here, and we would be bringing our stop loss there up towards our most recent swing high. We're then going to be targeting 1.5 times the risk, the same as our long trades. Another successful trade. Here is another example of a short position that we would have taken. We see on our wave trend that both our lines got into our overbought area. We're then looking for our green line to have a bearish cross below our red line, and then we're looking up towards our relative bandwidth filter to see if our white line is positioned above our blue. Now in this example, this indicator has not caught up yet, so we are able to wait for our white line to cross above our blue line before entering our short position. This trade will automatically be made invalid if we see our moving averages on the wave trend pull down towards our 50 level and cross below it. So we see that our white line managed to cross above our blue line, showing us there is enough volume to push the price down. So we're going to enter our short position on the close of our trigger candlestick, bring our stop loss there up towards our most recent swing high, and once again targeting 1.5 times the risk. Okay, I hope you have understood the trading rules. We'll now get into the backtesting to see what sort of win rate we can get with this strategy. Okay, the backtesting is now complete, and here are the results. So we actually managed to get a win rate of 67% on this strategy. We won 67 out of those 100 trades, and we found those 100 setups within a 2-month time span and actually managed to return 277% profit on our account. We also had 7 consecutive wins against 4 consecutive losses. Any beginner trader can apply this strategy to immediately have a shortcut and become a better trader. So overall, I'm really happy with these results. Do bear in mind that obviously spreads and fees will affect your profit return. You should definitely try and backtest this strategy. Also forward test it with paper money on the live markets. Okay traders, I hope you understood everything. If you do have any questions, please ask down in the comment section below. If you enjoyed, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.